The banking industry is showing signs of health and wealth. Overall profits for large banks are up 15% year over year. However, community banks are still struggling under the weight of regulations, low interest rates, and bad loans. Jackie Keenan reports from Florida.
Power lunches are common again here at Mise en Place in Tampa, Florida. That's good news for owner Marianne Ferentz, who is paying off loans she borrowed from Gulf Shore Community Bank to open her second restaurant.
They were absolutely willing to dig in and look at it with us and figure out how it could be good for our business and loan us the money.
Mise en Place is thankful to Gulf Shore Bank and vice versa. With more than $230 million in assets and armed with a recent capital raise of $6 million, Gulf Shore wants to grow to be one of the largest community banks in town.
You need to get to 750 to $1 billion in assets. That not only allows you to have the capabilities to service your clients and continue to service them as they grow, it also gets you to a point where, as we've seen fixed costs rise significantly in the industry, margin compression in the industry, at that level we're able to have the scale to drive the type of returns that investors would like to see.
5 years after the start of the financial crisis, community banks are still being closed. The number of banks shrunk to just over 7,000 in 2012, down from 8,500 in 2007. The 5 largest thrifts are now controlling 52% of all U.S. assets. The crisis also brought dramatic changes to U.S. banking regulations. Caballero says community banks are burdened.
Whether it's investment in technology, it's people, and quality people are expensive. So you take the same size institution, and now you've just moved the fixed cost bar.
In addition to regulations, overexposure to bad loans will continue to haunt community banks.
The banks are on the hook for that money. So they're gradually writing down those loans.
But trying to make money in a low interest rate world is tough when banks make money from yield. But Caballero says making a risky loan is not worth it.
You don't want to extend that credit risk, because what happens is a bank changes their credit risk profile and they get 3% more over an investment, but they take 12% more risk.
And with lending still tight, Ferentz says community banks might be the only ones small businesses can turn to.
Community banks are really what have kept me in business. I wouldn't be in business without community banks.
For First Business News, I'm Jackie Keenan.
The FDIC reports the number of problem community banks is down and bank failures have slowed.